Steve here. The closing bell just rang on a Tuesday that saw the S&P 500 pull back from its record highs, and man, the energy pits are doing exactly what we warned they'd do. Welcome to this explainer of the evening ledger, where we're going to break down the market tape and forecast exactly what's coming next. Look, we are navigating a highly technical, highly volatile environment right now. And that Hormuz mirage, that naive hope for a clean, easy geopolitical resolution, it's evaporating. It's hitting a brick wall of upcoming central bank decisions and a totally stalled ceasefire.
The reality of our situation is pretty simple, folks. We are staring down a Wednesday that is a literal landmine for your capital. Tomorrow? It's not just another trading session. It is quite literally the most important day of the second quarter. If you aren't mentally prepared for that 2 p.m. 0 hour, you're already behind the curve. Capital preservation is the absolute name of the game right now. To survive tomorrow's volatility, we need to understand precisely what the tape is telling us today.
Okay, let's dive right into this tape. The equity markets took a controlled breather today, but underneath the hood, a clear risk-off mode is definitely intensifying. The S&P 500 slipped almost 0.5%, finishing up at 7,138.80. But while equities cooled off, Brent crude is just ripping higher, up nearly 1% to $109.30. Gold's trading kind of choppy, sideways around $4,710. And Bitcoin, our usual canary in the coal mine for risk appetite, it slipped over 1.2%, down to $76,371. Make no mistake here, the money is getting incredibly defensive ahead of the Fed.
So we're operating within a strict technical structure right now. Retreating from yesterday's record close, your technical levels are etched in stone. Let's look at your primary line of defense, the 50-day EMA. That sits down at 6,792. Below that, your absolute floor, the 200-day simple moving average, is resting at 6,706. Listen, these aren't just suggestions. These are the defensive perimeters for your capital. If the market cracks, those are the zones where the bids absolutely have to step up, or it's lights out for this rally.
But let's talk about the real catalyst building all this pressure: Brent crude. It is the absolute monster in the room right now, knocking heavily on the door of $110 a barrel. And the fallout from this relentless climb, we're already seeing it bleed into the broader economy. Today, the industrial sector started to buckle under the weight of $100 oil. The Conference Board consumer confidence was the big headline, and I'll tell you, the mood out there is getting much darker as these energy prices actively tax the household. The longer oil stays elevated like this, the heavier the anchor gets for the broader equities market.
The absolutely crucial point here is how this energy surge is going to crash headfirst into tomorrow's schedule. Check your charts, set your alerts for the Wednesday super week. At 2 p.m. Eastern, the Fed's 0 hour arrives with the FOMC policy statement. The target range sits at 3.50 to 3.75%. Now, while a hold is the general consensus, every single syllable out of Chairman Powell's mouth at 2:30 p.m. is going to be ruthlessly dissected by the algorithms. With energy-led inflation ripping higher, the Fed is backed completely into a corner. They have virtually zero room to maneuver if oil keeps climbing.
And hey, if a hawkish Fed wasn't enough to chew on, right after the closing bell tomorrow, the heavy hitters step up to the plate. Microsoft, Alphabet, Meta, and Amazon are all dropping their earnings on the exact same night. Combined, just these four names represent more than a quarter of the entire S&P 500 by weight. Think about that. Here is the stark reality. If their forward AI guidance doesn't definitively justify their current, frankly sky-high valuations in this high energy cost environment, the recent S&P record won't mean a single thing. The market is demanding absolute perfection tomorrow night. Good luck with that.
Behind all of this inflation and technical anxiety is a massive geopolitical standoff. The primary driver for the energy surge remains the Strait of Hormuz, where roughly 1/5 of the world's oil is currently trapped. We are dealing with a strict binary reality here. On one side, you have Tehran's proposal. It offers to reopen the strait in exchange for ending the U.S. blockade, but it notably skips over the nuclear problem entirely. Washington treats this as a non-starter. On the flip side is Washington's power plant ultimatum. The threat to decapitate Iran's domestic grid remains highly active if the waterway isn't cleared unconditionally. That's it. Either a signature hits the desk tomorrow or the grid goes dark. There's absolutely no middle ground being priced in right now.
With that binary threat hanging right over the market, let's look at the underlying mechanics. We've hit a hard technical reality, a plus 145 reading on the 20-period Commodity Channel Index, the CCI. Look, when the indicator pins the needle this high, deep into severe overbought territory, while the main index is simultaneously retreating from a record high, you are looking at statistical exhaustion. The buyers are tired, the momentum is stretched paper thin, and the market is highly vulnerable to a massive downside shock.
So, we have to map out both sides of the tape for tomorrow.
The bearish case assumes the record high in the SPX was purely a Hormuz mirage, that we essentially traded up on the false hope of a ceasefire that isn't actually going to be signed, all while the Fed remains backed into a hawkish corner. If the Iranian grid is hit, or if those mega-cap earnings miss the mark, the regression back toward that 50-day EMA at 67.92 is going to be violent. On the other hand, the bullish case hinges on the belief that the power plant threat will force a total Iranian surrender, combined with the tech giants delivering a massive AI-fueled earnings miracle. If both of those catalysts hit, the bulls are hunting for 7,200 by Thursday morning.
And that brings us to the closing plan. Listen, when the warships are active and the Fed is on the clock, capital preservation is the only trade that matters. Let's break it down. First, respect that 6,800 support zone. Your 50-day EMA at 67.92 is your primary line of defense. If we lose that on a no-deal headline, get out of the way. Second, watch your CCI momentum. If it crosses back under 100 tonight, the upside momentum is dead in the water. Third, monitor that $110 threshold on Brent crude. As long as we're above par, the inflation trade owns the ball. And finally, use small sizes, keep your stops incredibly tight, and absolutely do not trust any headline about peace until the oil tankers are actually moving through the strait without military escorts.
I'll leave you with this to consider as you review your positions tonight. The ledger doesn't wait for latecomers. So are you ready for 0 hour? Because the market is going to move with or without you tomorrow at 2 p.m. Stay disciplined out there. Respect those technical levels we just mapped out. And above all, watch your averages. This is Steve. The ledger is closed.